A number of measures have been introduced today to support businesses, the headline grabber being the 23 billion National Productivity Investment Fund. And this is all about supporting innovation and infrastructure. Innovation, I'd just like to mention, we've got R&D tax reliefs, etc. And from 2020, 2021, we're going to see an extra £2 billion per annum spend on R&D. The Chancellor has announced substantial restrictions to salary sacrifice arrangements. This has been a common technique for rewarding employees in a tax-efficient manner. We're going to see a huge restriction in the range of benefits that can enjoy these tax reliefs going forwards. It's going to be a very small range of benefits. Examples of these include pension payments, childcare and cycle to work schemes. I am recommending my clients that they take advice now in terms of how to reward employees tax efficiently from April 2017. We've had updates on a number of corporate tax consultations in the autumn statement. Firstly, corporate interest expense. We're going to see a restriction on tax deductibility for large net interest expense, i.e. over and above 2 million, where that is over 30% of taxable profits. There'll frequently be a restriction on that tax deduction. Secondly, corporate loss relief. There's some good news and some bad news here. Bad news for the larger corporates, where we've in excess of 5 million taxable profits are being sheltered by losses brought forward. We're going to see a restriction in some of those cases. Good news for all companies is that there is a relaxation of the streaming required for losses brought forward, so we'll see far less trapped losses in corporation tax. Finally, just to mention substantial shareholdings exemption, we're seeing a relaxation of those rules to make the UK environment more competitive when compared with international tax regimes, so it's going to be easier for companies to sell trading subsidiaries tax-free from April 17.